I think we'll see pretty poor growth figures, but there will likely be at least a return to growth. Dr. Howard Archer, IHS Global Limited. On Tuesday, we have UK's inflation rate out for October. September readings saw a better than anticipated rise, and it is expected that this will be repeated for October. Whilst on the surface this looks good for UK's economy, but because of the steep depreciation of the pound, is rising inflation, particularly at a fast rate, perhaps more harm than good?
Well, I think the data on Tuesday could well show that the inflation rate rose to 1.2% in October, which would be a two-year high. And that would be up from 1% in September and 0.6% in August. That's actually a little bit higher than the consensus, which is for 1.1% reading. Obviously the Bank of England has been looking to get inflation up towards the 2% target rate. And the UK did experience deflation not so long ago. But in fact, inflation does look to become an increasing problem for the UK economy over the coming months, largely due to the weakness of the pound. And the danger is that we could see inflation overshoot the Bank of England's target quite substantially and then really squeeze consumers' purchasing power. I think there's a strong chance that the inflation rate could reach 2% in the early months of next year. And we think it could well reach 3% before the end of next year and reach 3.5% early on in 2018. At the same time, it's likely that consumers' earnings are going to be fairly muted. Our suspicion is that companies will look to keep wage growth limited as their input prices are put up by the weak pound. And because of a likely softening labour market and uncertain consumers, they'll probably be able to keep wages down. So you'll probably find that UK consumers are increasingly squeezed next year by rising inflation and muted wage growth, and that will obviously hold down consumer spending, which has been really the key UK growth driver for some time. So that certainly is a concern for the UK economy going forward.
Also on Tuesday, we have Germany's GDP figures for the third quarter. According to the Economy Ministry, despite Brexit, Germany is expected to see moderate growth in the third quarter. What are your expectations?
We're looking for growth probably around about 0.3% quarter-on-quarter in the third quarter, which would be another slight slowdown from the second quarter. Having said that, we think there will be an improvement in domestic demand in the third quarter. So we see the reason for the slowdown being a negative net trade. But we suspect that consumer spending saw reasonable growth in the third quarter, because certainly the fundamentals are still pretty good for German consumers, with decent purchasing power and employment at a reunification high. And there was also likely some pickup in business investment in the third quarter after a weak second quarter. But as I said, I think net trade was probably quite a significant negative impact on growth in the third quarter, which will probably cause growth to slow overall.
Okay, and Italy will also release its GDP statistics this week. It has been tough times for Italy recently, with the European Commission forecasting the country set to break EU rules on budget deficit and public debt reduction this year and next. Do you think GDP figures will reflect Italy's struggling economy?
Yes, I think we'll see pretty poor growth figures, but there will likely at least be a return to growth for Italy in the third quarter. In the second quarter, the economy actually disappointingly flat-lined. But we suspect there will be some growth in the third quarter. That will probably be limited to probably 0.2 quarter-on-quarter. We have actually already had out a figure showing that industrial production was decent in the third quarter. It rose by 1.2% in the quarter-on-quarter, which actually followed contraction of 0.2 in the second quarter. So that does imply that there was some pickup in growth in the third quarter, and it was probably that consumer spending rose slightly, and in case of Italy, there was probably some net positive performance from net trade, unlike Germany. On the other side of the coin, we suspect that investment probably remained pretty muted in Italy in the third quarter due to the uncertain outlook. So yes, there will probably be some growth in Italy, but nothing to get excited about.
Thank you for joining us today, Howard. So that's what to look out for this week, but for everything else, stay with us here on Dukascopy TV.